Hi, great everyone, dear friends. Today we will have an analysis of Taiwan Semiconductor Manufacturing Company. Now, a huge number of sectors of the economy depend on the capacities of this company. So I think the analysis will be very interesting, and I wish you a pleasant viewing. And we are begin. Taiwan Semiconductor Manufacturing Company is the world's largest manufacturer of semiconductors, which are used in phones, computers, in cars, the Internet of Things, and much more. The company was founded in 1987 as a joint venture between the government of the Taiwan and other private investors. TSMC is the largest contract manufacturer of semiconductor products. Some may reasonably ask, what does a contract manufacturer mean? Contract manufacturing is the work of an independent enterprise related to the release of products for the customer enterprise in accordance with the concluded agreements on quality, volumes, and terms. In fact, our company provides its production facilities to other companies in order for them to produce their products there. The company's activity is the production of semiconductor products, integrated circuits on silicon wafers based on patented customer technology. Taiwan Semiconductor is the technology leader among specialized foundries. The company distinguishes the following segments of its products. First, smartphones, production of technological processors, modules for memory, power supply, displays, various microcircuits. Their share of total revenue is 44%. Next, higher performance computing, manufacturing of central processing units, GPU, server processors, accelerators, network chips, and more, with a share of 37% of the revenue. Well, one of my favorite areas is production for the Internet of Things. The share of the total revenues is 9%. Cars, a full range of services and technology for today's smart electric vehicles, share of about 4%. Well, and other smaller segments of revenue. As you know, the Taiwan Semiconductor Company is very actively developing, but if we look at which segments exactly it is developing very actively, then we will see a certain trend. The main development of the company brings two segments of IoT or Internet of Things and smartphones. It is their segments that show the greatest growth in terms of revenues for the company. I think this trend will continue because now the 5G sphere is very actively developing, which in turn helps the Internet of Things and smartphones to develop very well. The largest regions of revenue is North America, about 62%, and China, about 18%. There is also statistics on the revenue of processor by their nanometers. In fact, we should pay tribute to the companies because in this regard it has one of the leading position in the world in terms of technologies. Well, I would also like to talk about business clients. Among the largest clients are many of the world's leading companies such as AMD, Apple, Broadcom, Nvidia, Qualcomm, Sony, and many others. The company faces intense international competition. Despite enormous competition, Taiwan Semiconductor is still a leader in its industry, with significant manufacturing capacity, a client base of the world's largest enterprises, and technological leadership in the market. Also, if we look at the latest news, we will see more and more data that TSMC is starting the construction of factories in Europe, in Japan, and of course in the USA. The business here decided to build a plant in Arizona, which will cost the company $12 billion. But these questions arises. Why do this? In principle, in Taiwan there is enough labor and it is much cheaper than in some USA or Germany. The feeling creeps in that some kind of trick awaits us. Agree. And you will actually be right, because in fact, although Taiwan Semiconductor is the leader in semiconductor manufacturing, it faces a huge number of risks. The first risk is the relationship between Taiwan and China. The Chinese government as a whole more and more wants to regain their power over Taiwan. At some certain points in time there were even rumors about an armored invasion of Taiwan by China. Since now Taiwan is supported by the United States and Japan, the situation has eased a little, but as for me, it still remains quite tense, and the risks from geopolitics are very important to take into account. And the second is that Taiwan is facing climate challenges. In 2020 and 2021, Taiwan experienced the worst drought not seen in over half a century. By the springs of 2021, rivers began to dry up on the island and the water supplies in reservoirs were coming to an end. And factories producing modern semiconductors for microchips require huge amounts of ultra pure water. Previously it was enough, now not very much. It got to the point that by summer of 2021 the government had to take radical steps, throw the remaining supplies of water to semiconductor factories, cutting off its supply to citizens and even farmers, despite the fact that agriculture production on the island was on the brink of disaster. Only these draconian measures prevented a drop in the production of semiconductors, the lack of which is already suffocating the world's microelectronics. At the same time, no one will give accurate forecasts for the next years. The climate is becoming very unpredictable, with a general tendency towards an increase in aridity and the powerful rivers which make it possible to organize an uninterrupted supply of water even in dry times. On a small island, simply not. That is, we see that there are also risks from the climate side. It is not clear how nature will behave on this island, and that is why Taiwan wants to protect itself as much as possible and build factories in other regions in order to somehow diversify its income. Another factor that caused the construction of factories in other regions was politics, namely US policy. As the semiconductor crisis hit many US companies very unpleasantly, politicians, congressmen, and even Joe Biden began to talk about the fact that they are too dependent on the technological products of the other regions. So they decided to allocate grants for the construction of their own facilities in the United States. Here there are already several points. Yes, on the one hand, the company began construction of a plant in the United States. But agree, when you start working in another country, this is much higher costs, more nuance and unforeseen costs. In general, we will observe this very closely. Well, the last risks for the company is competitors. In fact, as for me, the Taiwan Semiconductor company is now the only competitor that is no way inferior to it, both in terms of financial capabilities and technological development, is Samsung. Of course, there is also UMC. This is another Taiwanese manufacturer of semiconductor products. At the end of 2020, the company's market share was only 7%, so I do not think that it will be a problem for TSMC, and plus technological they still lag slightly behind the industry leader. The only advantage of Samsung in the race for me is that Samsung can provide a certain level of demand thanks to its own production of smartphones. In fact, TSMC and Samsung Electronics now controls almost 75% of the world's semiconductor production. TSMC has a market share of about 56% and Samsung Electronics has a share of about 17%. Well, and some other big competitors from TSMC I have not yet observed. Well, perhaps Intel, but so far Intel has not reached the technological level that is needed to fully compete with Taiwan Semiconductor. In a recent statement by the CEO of Intel said that they should catch up with the leaders of these industries, that is TSMC and Samsung, were so 2024 or 2025. But at the moment, nevertheless, Taiwan Semiconductor is unconditionally the leader of this industry, and how for me to keep the share of semiconductor production about 50% of the company is quite capable, but I think it will hardly be possible to capture a larger market share. This is due to several points. The first reason is a large number of competitors, such as Samsung. Political problems, after all, many countries are unhappy that all semiconductor products are produced is only one region. Therefore, most likely more and more domestic production of semiconductors in the country will be required. But fortunately, the company operates in a growing sector, and even if the current market share is maintained, the company will be able to increase its revenues. Well, friends, so the time has come to move on to the company's financial indicators. We will start, as always, with the dynamics of income. Here we can immediately see what's growing, both revenue and net profit, and at very good pace. Also feels well the free cash flow of the company. It has a clear growth trend. With regard to future revenues, analysts predict the company's revenue and net profit will grow at levels of about 20% annually, which in any case is a very remarkable growth rate. Then we move on to the balance sheet of the company, as we see both assets and liabilities grow. But since assets once grow faster, we get an increase in the company's net share capital, and at a very good pace, which is a very important aspect for us as investors. At the same time, the debit load of the business is modest, as for such a scale of the company, 38%. Not only is it as a whole, it is not a large level, so the company still has a fairly large amount of cash in the account, which adds security to this business. Further, I purpose to look at the net margin of the company's work. It is at very high levels. Net margin is 37.5%, which is definitely a lot and of course above the industry. Profitability indicators are also at very good levels and above the industry. Well, here we got to the indicators of the cost of this business. In fact, I want to say that in principle the company is not cheap, but taking into account the fact that is a growth business that should grow by about 20% annually, that in principle the cost indicators will return to normal already in 2023-2024. The current payback of the company with its net profit is 27.5 years. Well, that is the indicator price to earning or P ratio is equal to 27.5. Forward or forecast P ratio for next year is already 23.5, which is already much closer to the norm. The company also pays dividends, though small, with a yield of only 1.6% on invested capital, but dividends are growing quite well by about 12 or 13% annually, which is certainly a very good growth. While the cost indicator for paying the same dividends is only 46%. That is, the company spends 46% of its profits from the payment of these dividends. I can't say that is the level directly remarkable, but still the company pays dividends without much stress. Unfortunately, there is no buyback of shares from the company. That's basically all. I think we have sorted out the most important aspects of the business, and it's time to summarize. In fact, I would like to note that this business is certainly very interesting for investment, but nevertheless, I'm a little repulsed by the large capitalization of the company for a second, $600 billion, which tell us that it will be difficult for the company to show doubling or tripling in quarters in future periods. Yes, and competition in these sectors is growing. In fact, I like this business, and at cheaper levels, say about $100 per share, I would love to buy this company. As for the current levels, in principle, I don't think that if you buy at current prices, you will overpay. But still, I would like to take a cheaper company. And the rating of this company will be 7 out of 10. Good business with small but dividends in the next few years should show good income growth, but accordingly with its own risks and disadvantages. Thank you for watching, friends. I'll be really glad to see you at the next video. Goodbye.